Good morning, everyone, and welcome to the Prosperity Through Multifamily Real Estate Investing Podcast. I am your host, Real Estate Cody, and with me, as always, in the co-pilot seat, the connoisseur himself, coffee connoisseur himself, Mr. Brian Alfaro. What's up, buddy?
Cody, good morning. Nice to see you.
I made sure not to leave it out this time because you were upset that I left it out last time. So.
That's right. I almost had our audio guy go back and edit it in. I was really disappointed.
I'm not going to leave you hanging anymore, man. I'm not going to. So, Brian, what's up, man? It's been a fun, exciting couple of weeks. What do you say? We've been busy hitting the ground. We've got a lot of great things going on here at Blue Oak, and we've been able to, cement some good relationships with our potential guests that we have on today. So, fun times, right?
Absolutely. We're wrapping up summer. It is nice and hot here in Houston, Texas, but we've got some great things going on. We've had a good year here at Blue Oak and got some other exciting opportunities in the pipeline, I'd like to say. Some good things in the work, and definitely excited about our two guests here today who, we're hoping one day we can maybe do some business with. So looking forward to it.
Absolutely. We definitely got some movers and shakers on today. So tell us who that is.
Absolutely. So today we'd like to welcome to the show the two gentlemen over at Arrows Capital Group, Frank Lattiere and Loren. Frank is the acquisitions team leader at Arrows Capital Group, which is a multifamily syndication team that offers every investor great opportunities to maximize returns while prioritizing people and positively impacting the communities they invest in. He comes from a finance background, having spent over a decade as a commodity options trader before transitioning to a software development role, focusing on process automation. Since joining Arrows Capital Group, he has used these skills to create efficient acquisition systems, enabling the team to effectively analyze investment opportunities, provide feedback, and submit quality offers on a large number of multifamily deals. He's incredibly lucky to be doing something he loves alongside a team of people who consistently support, challenge, and elicit growth amongst one another. With him, we have Mr. Loren Jacobs, who is the real estate operations leader at Arrows Capital Group. And let's see, he's a fifth generation real estate professional with experience operating single family, commercial, small business, new development, and multifamily syndication investments. He currently has ownership interest in 448 multifamily units with 420 under contract. He and his wife have also started, purchased, and partnered in multiple small businesses, including a Black Angus production operation, acquisitions of a commercial fitness center, e-commerce, and construction business. His strengths lie in project feasibility, commercial real estate and business acquisitions, business operations, and growth. His passions include spending time with his family, raising his children, giving back through local charities, and humanitarian work as well. So, Loren, Frank, thank you for coming to the show. Welcome to the show.
Hey man, really appreciate you guys having us on here. It is an absolute pleasure and a privilege. You guys are doing awesome things, and we're just excited to further deepen this relationship. And I'll go back to a few minutes ago and say that we will do a deal together at some point in the future.
Boom. We sure will, man. Yeah, we absolutely will. And we're really excited to have you guys both on. And Brian, I think, remind me, I don't think we've had two guests on at once. I know usually you and I are the one that are coming out as a pair when we do podcast interviews, but I don't know that we
think you're right. You guys might be the first lucky pair to be on the show together. That's a good thing.
Right.
Well, way to break the ice, guys. I'm excited. So, well, man, like I said, great to have you here. Tell us a little bit more about y'all's background.
I'll go ahead. I'll give you the short and sweet version. I met my wife in Mexico. We were both on vacation about 7 years ago. And, since then we have two beautiful children, and that's really the foundation of the why we're doing everything we're doing, why we're here, and, why we wake up and get after it every day. We started investing in real estate right off the bat. Fortunately, like you mentioned earlier, Brian, we've got some family experience to pull from, and, the traditional route. We found, single families, fix and flips, buy and holds, graduated into the commercial retail, development projects, small multi, and ultimately, found our way into multifamily syndication. We're passionate about helping people. We're really excited about the niche we're in, and part of the reasons we chose real estate and multifamily is because of our ability to have an impact on so many people. Responsibility, I would call it, to legally provide clean, comfortable, safe housing, but more importantly, to a social responsibility to provide a positive impact on the lives that you're touching through the homes that you're controlling. We love what we do. We're excited to show up every day, and that's our why behind our drive to expand our portfolio and impact people.
Awesome.
Yeah, for me, similar end to the story. That's quite a similar beginning. I'm in Chicago now, southwest suburbs. I was born here, grew up here, went to college at University of Illinois, and when I got out of school, I got right into trading, as you mentioned in the introduction there. I was a commodity options trader down at the floor of the Board of Trade. And that was an awesome career, for 10 or 12 years coming out. In terms of real estate, I had owned a couple just on my own, just a condo, like a townhouse and stuff like that, downtown Chicago. And I didn't really love it, to be honest with you, doing the management and all that kind of stuff myself. I'm not really a hands-on guy like that when it comes to fixing toilets and stuff like that. So I kind of, when I met my girlfriend around the same time Loren did, I think it's like 8 or 9 years ago now, we kind of settled down a little bit. We started having a family pretty early. We have a 6-year-old daughter now and a 3.5-year-old son. So I got out of it once the kids got involved because that was a little bit too much for me. But now in coming back, and now that they're getting a little older and I have a little bit more time, I started looking to get back into real estate in that respect, just buying a 2-flat or a 3-flat and doing it myself, and was very lucky to have a brother-in-law put me on to, a couple people in the industry who have been just great influences on me and got me into these networks, kind of like what you guys do, honestly, with this podcast, and just like getting the education out there about multifamily and how, you can make an impact not only on yourself, but on, the people that you're, buying these places for and creating housing for and all that kind of stuff. And I was lucky enough to meet Loren and DJ and the guys at Arrows Capital. And I think for me, it just fits really well. I really like the analytics part of it. I really like the operations. I really like doing the modeling, and analyzing deals and stuff like that, because it really reminds me of trading. It's a much slower process. Obviously, it takes a long time to analyze a property and put in a bid, whereas on the floor, doing that 15 times a minute, basically. But I'm just very, very happy to be and very lucky to be where I am now. And, like I said, partnering up with, guys like you and being on, podcasts like this and getting it all out there it's really, really awesome. So thank you guys for the opportunity.
Yeah, absolutely. I appreciate you guys sharing your story. And, what a great way to kick off the show. And for those that don't know you guys, I really hope that they do connect with you afterwards and get to know you both, because, you both said it so eloquently, right? This is so much more than just your own personal financial gain, right? This business is about impacting the lives of others, as you mentioned. And so everything we do, the show, we talk about the business side of it, but there's a human side of this as well, right? And being able to impact the lives of others. And we talk about serving others, right? And so I really appreciate you guys mentioning that right out of the gate, because I think it's important for people to remember, you have the ability to leverage this vertical and this vehicle in a way that could positively influence somebody else's situation or somebody else's life. So big kudos to you guys.
I really appreciate that, man. And to carry that on a little further, like you alluded to, Cody, so much of this business is very transactional, and that's important. Obviously the transactions need to take place for us to acquire and control real estate so we can provide an impact on the people's lives through real estate and through their homes and where they live. But there's a major people component. The whole business, there's a people component, whether it's our partnerships, whether it's our teams, whether the, our investors, residents, there's so many people involved and too often I see that get lost. There are a lot of incredible operators out there that focus on that, socially responsible and, people-centric portion, but there are a lot that don't. And, we're here, it sounds like we're all here to really help to shift the tide, balance the scale and put more of an emphasis on the people. You can have both. You don't have to pick one or the other. You're not sacrificing the transactional or the returns or the money because you're starting to focus on the people. So we're love hearing others that are aligned in those ways of thinking, and very excited, and we will create an opportunity to partner, to work with those, and to help increase their potential success as well.
Yeah.
If I can just add too, because I know we're talking about impacting people, and one of the things that I kind of forget to say all the time, even though it's very obvious to all of us, I mean, I know you guys are in the middle of raising some capital on at least one deal that I know of for sure, and I know that we are as well. But the investors, that we can have an impact on. I know for myself, I mean, again, selfishly, I wanted to get into this business because you start to see, the impact it can make for yourself personally if you have these type of investments, and how it can diversify and all that kind of stuff. A regular portfolio that I think most people have. And I think that's one of the things that I'm starting to love more about this. And again, like I've mentioned to you guys before, following the type of framework that you guys have in terms of, raising capital and investor relationships and stuff like that. It's just another way to bring that impact to, a bunch of people. I know for me, so far it's been like family and friends and stuff like that, but I'm excited, to tell them about these opportunities, to get them involved, and to see them benefit from the things that we're doing as well. So just a lot of opportunities to make an impact on a lot of different groups of people.
Yeah, absolutely. And just to echo what you guys are saying, I mean, listen, there's a direct correlation between relationships and success. Because Loren, you said it right. I mean, every aspect of our business involves people and involves relationships, whether that's opportunity, whether that's investor relations, like I said, the residents in our communities. Every aspect of this business is all relationships. So the stronger, deep-rooted relationships that you have, that's where success follows, right? And so you can't have one without the other. I definitely would argue that for sure. So, and I know
there's that cheesy saying, Cody. It's not what you know, it's who you know.
Who you know,
right?
That's right.
So as we hear all these real estate sort of things that get said, network as your net worth, and all these different sayings. But the deeper and deeper you get, and the more and more experience you get under your belt, you become the guy who actually starts saying it, not just hearing it, because it's so true. Those sentiments are so true, and it really is about who you know. Because anytime you're faced with a challenge, you're looking for a deal, you're looking for a vendor, you're looking for a property manager, you need more capital. The question then becomes is, who do I need to call, right? So who you know is super important in this business, and definitely can't be taken for granted.
Mm-hmm. Yeah, I would agree, Brian. And we tend to overcomplicate this business sometimes, especially if you're new, right? I mean, there's a learning curve, and there's so many different moving parts, so many different responsibilities, a variety of skill sets that you need to obtain. But at the end of the day, just sticking to good old solid relationship building, that's where you find opportunities, right? And so you just lean in heavily, like you said, on that network and building that out, and the rest kind of follows. So, and speaking of relationships, you guys started out, I guess, independently in your own real estate ventures, and then you've seemed to align and found each other. How did you guys meet and come together?
Oh, that's a really good question. We've, just through networking, like you mentioned, it's not what you know, it's who you know. And we, through networking, making an intentional effort to go out and meet new people in the space, network with like-minded investors. We came across one another. We're part of the same mastermind, and so we're part of a niche community where you're bought into a group of people who are all interested in the same things. Not that you have to go that route to be successful in this space, but personally, I found a tremendous amount of success in being able to network with all these people who are doing the same things I want to be doing, and a lot of them are very good and very successful. I found them in one place and have a direct link to access those people and to network with them. That's how I met Frank. He from the get-go demonstrated his incredible skills of analysis, underwriting, and some other things, and that was a need that we had at our team. And so it was just a natural fit. And, we aligned in our way of thinking, our principles, our morals, our mission and vision. So it was a natural fit. And he's done a tremendous job, taking a little bit of what we started and really, perfecting it and making it what it is today.
Thank you, Loren. I appreciate that. And I can actually elaborate on this story a little bit because I was just going through, one of the things I like to do is make sure that I go back and see, where I was 6 months ago or a year ago, so you can kind of appreciate, the growth that you've had and stuff like that, and not just get caught up in, where you need to go. And I was actually looking at the first, like he's saying, Loren does he has like a Facebook group where he did like an underwriting call once a week, and he kind of, just like basically just teaching people like who was in my position who had not done it before. Just the basics of underwriting, the basics of going through a T12, the basics of going through a rent roll, kind of putting that all together. And one of the first deals that I actually sent over to him personally that I had underwritten, and wanted to just get his opinion on it and stuff, I went back and looked, and it's, pretty embarrassing to see, kind of the stuff that you miss and the stuff you didn't even know about yet. And like the questions I was asking, I mean, I can't imagine asking him that kind of thing now. So it was awesome. And like I said, he was, very responsive, helped me out, and has brought me along, this path in terms of underwriting and acquisitions and stuff like that the entire time. But I actually was just looking back at that first conversation we had, and that's pretty funny to go back to.
That's a great story, guys. And I tell you, it's pretty powerful when you can have partners that make you better, right? I mean, that's a great relationship when you have people that make you elevate to another level, right? And they bring you along. And I know, just speaking for Brian and John and I'm thankful to have those two guys, because that's what they do. They force you to level up, and hopefully we encourage each other to just keep pushing your own boundaries and being better, because it's not about you, it's about your team, right? And so, but in speaking to how you guys built your relationship, there was three things that I wanted to kind of highlight there that I just really found to be really resonating. Is, Loren, you mentioned the term intentional effort. I really like that phrase, and because I think it's very important for people to understand is, when you go out there and you're trying to build your business, you have to be very intentful in what your target is, right? Whether that's the type of deals you're finding, the type of relationships you're trying to build with investors, partners, whatever the case may be. But you have to be very intentful, so that way you're not running around loosely, so to speak, and burning or wasting a lot of effort, right? So I really, really like that term, Brian. We're gonna have to steal that from Loren and tag him with that. But
borrow the correct
borrow. There you go. Frank, you mentioned this too, and we talk about this all the time. You got to appreciate the journey, and this is something that I don't think gets highlighted enough. Is, we put so much time and effort in our days. I know for you guys, y'all working your tails off. I know for us, it's 18, 20-hour days, some days, every day. And there's a lot of sacrifices that come with that. But when you look at where you are now versus where you started, you're in a completely different position, both in your business and I'm sure personally. And it's good to reflect and sit back and appreciate the growth and appreciate the successes you've had along the way and all that you learned. So, really wanted to highlight that. Always make sure to reflect on the journey. I think that's great. And then you also mentioned the value through education, right? Loren, you were hosting a weekly underwriting course on Facebook to help give value back through education. And that's kind of like the thesis behind our thought leadership platforms, right? Is how do we give back to the communities we serve through educating, being resourceful, providing either, access to guests like you guys who have experience that can help them grow their business, or direct them to people, like yourself that can, again, be a benefit to their business and whatnot. So it's all about giving back through education, which is we're very, very big proponents of. Brian, what do you think?
Absolutely. Giving back through education is key. You run into a lot of investors that are very experienced investors, but maybe not very experienced real estate investors specifically. And I think sometimes we forget, because we live and breathe real estate, that the things that we know, knowledge is power. The things that we know is they're not common sense, So some of the terms that, we throw around, or the acronyms, real estate has tons of funny acronyms, right? we're just speaking a foreign language to some people sometimes. So having that educational component and being able to nurture investors and to have the right people on your team who understand the value, to close the conversation, to understand the value of relationships, that understand that, when you're trying to attract capital, raise capital, you might be spending 30 minutes or an hour with a particular investor, sort of walking them through the investment. How does this work? Answering their questions. And maybe they might not even invest, but they're now primed for the next opportunity, right? So it's all about that relationship building and that nurturing. So all that stuff, all those points are definitely really important.
Yeah, absolutely. Well, guys, let's pivot a little bit here. Let's get into some of the details and I guess operational side at Arrows. And I'd love to learn a little bit more about each of your skill set and responsibilities at your company. And Loren, I'll start with you if I can. That the past 2 years, well, first off, I want to highlight again, you had 448 units under management. You have another 420 under contract. So moving with a lot of momentum. Obviously, if you've been in the space for any time now, the past 24 months has been a very, very competitive landscape across commercial real estate. What are some challenges that you're running across to in continuing to expand your portfolio in today's market?
Man, that's a great question and undoubtedly a loaded answer. I'll try and hit the high points. Yeah, I mean, we've been very fortunate to come into some great opportunities along the way, and again, a lot of that goes back into the intentional effort to put yourself in the right position, network with the right people, prepare yourself. A lot of times I'll call it luck. But I don't entirely believe in luck. I know one of my favorite philosophers, Seneca, he had a great quote where, luck, I'm probably going to butcher it, so forgive me, but luck is, simply the crossroads of operation and opportunity. So we try to prepare ourselves, education, networking, getting in front of investors, being astute with other experienced operators who could sponsor a deal, getting all your bases covered, preparing for a potential opportunity. That way, when opportunity comes, you're positioned to strike. I think that's what has allowed us to be, have a drop of success in this really exciting, but difficult economic climate and difficult market. I mean, it is incredibly competitive. We try to be very efficient. I know Frank will talk a ton about the efficiencies that have been built on the acquisition side. So I'll leave that for him. That's his area of expertise and everything he's built. But we try to be very efficient, so it's not a week gone by from the time a broker has sent us an opportunity to the time that they, hear a response. We try to be very competitive. I mean, your cost of capital. If your cost of capital can be lower than another group's cost of capital on the debt and or equity side, then you have a competitive advantage. Being creative, how can you create opportunity? How can you create additional streams of income? How can you create value where others may not see value? Those are some of the things we really focus on to try and separate ourselves from the noise. How can you circumvent a lot of the competition? We're focusing a lot on secondary and tertiary markets. We're focusing a lot on direct to seller opportunities. So we're not competing with brokers and their Rolodex of qualified buyers. So those are some of the ways we're trying to set ourselves apart from everything that's going on. Some of the ways that we try to we've been able to still find and take advantage of opportunity in such a competitive market.
Well, I tell you that there's a ton of nuggets you just dropped in that explanation. I mean, a ton of value that we can dive in deeper and deeper into each of those. But do you feel like there's been one particular aspect of those business, whether it be the cost of capital, like you said, being creative, being intentful in your networking or your efficiencies? Do you feel like there's one of those that maybe have kind of stood out amongst the rest or have helped propelled you more versus the others? Or
I think honestly, I think the one thing that has set us apart the most is, one, having a network of great sponsors, having a network of great people such as yourselves who find and realize opportunities. And just, like you mentioned earlier, Cody, having those existing and deep relationships with those individuals, being authentic, being yourself, adding value with and asking nothing in return or expecting nothing in return. And then when other people who are in your network, those operators find deals, I hope they think like, man, I want to partner with Loren and Frank and those guys at Arrows Capital Group. I think that is probably the one thing that has led us to the majority of the opportunities that we've been a part of in the last 12 months.
Well, I know Brian, John, and I want to partner with Arrows. Can we do that? And we will. We will. Well, Frank, I'll kind of kick it over to you, and I'll kind of ask a similar question. As the acquisition specialist, underwriter, and analyzer on the team, I guess. What have been some of the challenges that you've seen over the development of the landscape in the past 24 months, especially for underwriting? I mean, I know, it's completely different landscape even from 12 months ago, right? Pre-COVID. I mean, it's a completely different landscape. Underwriting is evolving and it's changing. So what have been some of the challenges you've seen on the acquisition side throughout this past 24 months?
Well, as Loren would say, I mean, there are plenty of them. I could probably spend a lot longer than we have talking about the challenges, but one of the main things that we see, I guess going from the start to the finish, at the very front end for us, we've gotten to a point where we see a lot of deals coming through our system. We're looking in a few different areas. As Loren mentioned, we're going direct to seller now as well. We have an acquisitions team, and these guys are, they've developed a lot of good relationships. They get a lot of good looks on deals. So one of our first, issues and challenges that we've come up and tried to tackle here is how to efficiently, kind of weed through these deals and give the right time. We only have a certain amount of time between all of us on the team. And as you guys know, underwriting can be a very time consuming process. So it's kind of like how to efficiently get a deal through our system so that we know that we're not passing on something that's good, and that we do know that when something is good, we are giving it the attention that it deserves. Some of the ways that we've been able to do that, we've kind of created our, a preliminary analysis type tool, which I feel like it's similar to what a lot of people use out there, where you're looking at, you're looking at rents, you're looking at where you can bump the rents, you're looking at the operating expenses, and you're kind of coming up with an idea of like, what should be the value if the cap rate is this, or what should be the value, based on like a 1% rule or something like that a lot of people use. And that's good off the bat. We've kind of taken it to another level where we kind of now tie it into the investor returns, because really at the end of the day, what we're looking for is, if a deal makes sense, it has to make sense for our investors first. So we've tried to take those same metrics that you can kind of put in once you get a rent roll in a T12 and come up with a simplified version of like, okay, if these assumptions are true, what would it look like for our investors, and what price would we have to get to in order to get the returns our investors are looking for? And that has helped us out tremendously, because it's easy, it's a little bit easier for us to pass on some deals early on and focus our attention on the ones that make sense. Another couple things we're doing, we got a couple awesome guys on the team in terms of, just straight operations, Excel, Google Sheets, that kind of thing, where loading up a T12, loading up a rent roll, it's taking a lot less time now. So we've created some efficiencies around that, where I feel like if we get in, we're looking to get in 20, 25 deals a week through our system here, it would not be possible without, those types of operational efficiencies that we've been able to develop. So that's on the front end. On the back end, that's where I don't think we've overcome the challenges quite yet. But as you guys know, getting to sending out an LOI, getting into best and final, and then finally getting a deal under contract, that's been we have a few stories there that are, it's a couple tricky things in terms of getting that final to the closing table and everything like that. So those are challenges that I would say it's still in progress in terms of working on.
Sure. I would argue that's probably everybody's challenge right now is just getting to the stage of contract. It's tough. Brian, you look like you was about to say something.
Yeah, I mean, I just want to highlight the word that I keep hearing both of these gentlemen say is efficiencies. And that leads me to think about systems. And then that leads me to the next thing it sort of leads me to think about is just having a team, which is very, very, very apparent with Arrow's is infrastructure, is that you guys have systems and teams in place. And this is something that Cody and I are always preaching, especially if we have any investors listening that are maybe just getting started or newer to the space that are really trying to take on this business on their own. It's not impossible, but it's definitely a challenge, especially if you're trying to scale. If you're looking to buy, 4 units, 6 units, 8 units, and sort of do your own thing, maybe self-manage and do that full time, totally doable. And you can still build a tremendous amount of wealth. But if you're really looking to scale your portfolio, having those efficiencies in place, having those systems in place, and then ultimately the big thing is just being prepared, because, we hear this all the time. And I like to ask people, what if I dropped a deal on your lap tomorrow, the deal of a lifetime? Can you close it? Right? That's a really important question you have to ask yourself almost on a daily basis, because I know when you're getting started pretty early, everybody, if you ask people what the number one challenge they have or complaint you sort of hear from operators, it's like, I can't find a deal. I can't find a deal. But I like to ask myself, can I close a deal even if I found one tomorrow? So I think you guys are doing an awesome job and explaining it and just highlighting to our listeners that it's really important to have those efficiencies, have your ducks in order, have those systems, and then ultimately build a really strong team.
Yeah, absolutely. And I love that question. I'm going to, in return, borrow that question. So that was really good. I love that, Brian. And to drive home that point a little further, the foundation of all of that is, in my opinion, empowering people, empowering our team, empowering our investors, empowering our partners, empowering the residents. Specifically looking at our team, we ask ourselves daily, what can we do to help you be more successful? What resources can we build? What do we need? What do you need? What tools can we offer? What subscriptions do we need? What are those things that are going to help you to be more successful? And that does a lot of things. I mean, one, that's just, again, you're adding value. It helps us meet our missional goals of improving and increasing the success of others and our teammates. It helps, build a wide, strong, and deep foundation. And from there, we're going to be able to build a big building on that foundation, a lot of units.
Yeah.
And that's, we love that part. So it is a people game, and focusing on the people that you're surrounding yourself with first is really, this kind of brings this whole conversation full circle.
Yeah, absolutely. And I think I want to bring you guys back and maybe have a whole nother podcast episode on really what it means to be a business leader. Right. And because when we're talking about some of the things we just talked about, building teams, efficiencies, empowering people, things like that, your job as a company or as a business owner, especially with teams that are working with you, is to empower, like you said, empower those teams, influence those teams, set the vision, and encourage the team to move towards that one vision, and trust that they have the capabilities to bring you there. But you give them the resources, you give them the guidance, but you're influencing them. It's not a dictatorship, right? It's a, hey, how are we partnering together to all achieve that one end goal? And I just love that, man. I love that conversation. And I think that's what people need to understand when you're getting into commercial real estate, apartment syndication, you're a business owner. You're managing people, you're managing systems, you're managing real estate. Like you're operating a small business, and there's qualities of being a successful small business owner that you have to have. And so love this topic, man. Again, another podcast episode, more to come, but to build off that, but I do want to extract a couple things out of there if we can. And going back to the two things that go hand in hand: deal flow, deal funnel, and cost of capital. Right. And I want to kind of elaborate, if we can, on that a little bit, or expand on those two a little bit. And Frank, could you walk us through the system that you have to like with the deal flow, right? How does it get into the funnel? How does it get streamlined to get that feedback back to the broker? What's that time frame look like? And then I want to kick it back over to you, Loren, and say, all right, well then how are we incorporating in that cost of equity, so to speak? Because I think right now in this landscape, yields are getting tougher, right? Return expectations are getting harder to come by. And so what does that conversation with your database look like? So Frank, I'll kick it back off to you if we can. Walk us through the funnel in that process, if you wouldn't mind.
Absolutely. Absolutely. So basically we have, more or less 3 different ways that we get a deal coming into our system. And that kind of like kicks it off. One would be talking to a broker. The simplest one, we have a bunch of broker relationships. They'll come out on a distribution list or, however else you want, maybe a pocket listing or something like that, get a T12 and a rent roll. And that's the start there. We also, like we mentioned, we have a direct to seller system. So we're constantly, going direct to seller, making cold calls, setting up warm leads. And we have a person on our team who is extremely talented at having those conversations with someone who says anything like, hey, I'm kind of interested, or I'd love to hear an offer. If he gets on the phone with them, he's going to get a T12 and a rent roll from them, and probably, I don't know, be invited over for the next birthday party or something like that as well. So, and then partnerships is another way, guys, groups like you guys, other, co-sponsors and stuff like that we've looked at. But it all starts, as you guys know, getting that information that you need in order to, analyze a deal. Once we do that, we use Google Drive and we use Airtable, and we put everything into a folder, and we have our own, like I mentioned, preliminary analysis tool, and like full deal analyzer, and we kind of get all of our stuff in there, and then we have the first person, whoever made contact with the partner, the seller, or the broker, they kind of put this initial information, your OpEx, your rents, your rent bumps, all that kind of stuff into a preliminary analyzer. And if that kind of like passes our criteria, that's when we move it on into the next stage for us, which would be just a flat like data entry stage. So we basically have, just again, a couple systems set up where anyone on our team, so we can kind of prioritize our time and stuff like that, can go in there, get the rent roll, get the T12, get everything into the format we like. And when we put that into our deal analyzer, all of the analytics that we want to see out of those 2 things are kind of like automatically calculated and put in the places that they need to be. Once it gets through that stage of data entry, then it will move on to an underwriter, which will usually be, Loren or myself or a couple other guys on the team are really stepping up lately and kind of doing it because we have so many. And that's
a good problem to have, by the way.
Yeah, exactly. It's a problem that 6 months ago we were hoping to have, so we should be happy about it now. And that's where we go into like the deeper dive. And again, Cody, I know I talked to you before, and I know you kind of go through this on every deal, but that's where you're getting more into, okay, I need to look at my insurance. I need to really go out to a tax consultant and get a legitimate quote on what this would look like post sale. I go out to our, lender contacts and say, okay, what would the debt look like on this? And that's kind of like the full on, if we're at that point and the returns are looking good and we can kind of hone in on those very specific things, that's where we start to prep for, sending out an LOI basically.
So Frank, looking back at that process and love the system, by the way, I would definitely tell you, we mimic something very, very similar to that. But what is the time frame in that system? Boom, deal hits the top of the funnel to the time that final last pass underwriting's done, maybe property tours, LOIs are going out. What does that time frame look like?
Ideally, at least the first part, in communication with the broker or a seller or a partner, we like to get feedback within 48 hours for sure. Initial feedback, it might not be like, hey, this is what we can offer, but at least like, okay, here are the questions we have. Here's where we see us coming in. Can we get a conversation going or not, basically. Once it gets past that's into like the data entry and underwriting and stuff, that could be pretty dependent, depending on the conversations you're having with multiple different people. But I would say that if someone puts a deal in that underwriting, stage for us today, and I can look at it, I would like to, give it a couple hours and have some feedback back by that point. But like you said, getting in contact with people at all, we kind of prioritize where if we're looking direct to seller or we're looking at like an off-market deal or a partnership deal, we're kind of prioritizing those, whereas the on-market deals where there's already a call for offer date or they haven't really put one out there yet, those kind of get, not prioritized necessarily right off the bat.
Sure.
But hopefully the whole turnaround, I mean, ideally would be, a week or two at the most from the first day that you get some initial feedback. And then by the end of a week or two, hopefully we could have, at least without being on site, where we think, we can be in terms of an LOI and stuff like that.
Yeah, absolutely. Well, you're absolutely right, man. The feedback is so important, right? And whether it's 48 hours, whether it's a week, you have to be given the feedback, even if it's not the right deal for you. I guess in particular, when you're working with the brokers, right? You have to give them that closure, no matter what the outcome of the deal is, because that's just going to solidify that relationship. If you just pull off, if you just talk to them the one time, you never talk to them again, well, they're never really going to take you seriously. So that's good. That's a good point. And the faster you can get them that feedback, I think it gives you a competitive advantage as well. But so Loren, I'm going to come back to you then. So you have the deal funnel, the deal is going through the process. And then now it becomes, like you said, does this match our expectations from our investors, right? Does this fit the core thesis? And again, you highlighted this point so correctly, is cost of capital is key. I mean, whoever has the lower cost of equity is ultimately going to be at a competitive advantage. And so I think as operators and as syndicators, I know we've been doing a lot of education as what we're seeing in the market, the trends that we've been seeing as far as yields and such, because valuations are just skyrocketed over the past 12, 24 months. How are you developing that, and how are you kind of educating your investor database and keeping them attuned to not only what you guys are doing in your target deal flow, but also what the market's giving you?
Yeah, that's another great question. Thank you. So the cost of capital, I mean, we're using the almighty OPM, other people's money, to acquire, large multifamily communities. That capital, that money that we are borrowing from other sources, is not free. It comes at a cost, right? So first, the debt that we'll borrow from a lender is a relatively fixed cost. We don't have a ton of control over that. I mean, there are different debt sources that will offer, different rates or different costs to borrow their capital. And the stronger your team, the more experience your team has, you may get a bit of a discount with certain lenders. Although, that the debt is fairly fixed. So you asked about what are we doing? How are we approaching, finding a most efficient cost of capital on the equity side? So the equity would be, the money that we raise from passive investors to close on these properties. That's a solution that we're still working on. So I'm not going to pretend to have all the answers and have that figured out. But it's a question that we're asking ourselves. We know what the problem is. Now that we know what the problem is, we can find a solution. And the problem is that in today's competitive marketplace, the returns that we were offering, or, the cost of capital that we were utilizing on the equity side of the capital stack a year ago, isn't working for every deal now. So we need to, we're adjusting some of our investor expectations, right? So maybe instead of saying, we're looking for a minimum 9% cash on cash return 6 or 12 months ago, now we're looking for a minimum of, an 8% cash on cash return. Adjusting some of those expectations, constantly reaching out and looking for new sources of equity. I mean, there's sources of equity out there. For example, I know in my hometown, we had several tax credit investors where these are large, big time, heavy hitters, very large net worth individuals who were less concerned about a return on their capital. They were mostly concerned about capital preservation and saving some of the cost, from the tax man. So they would invest in these municipal infrastructure, tax credit programs, highways and such, and they would invest huge amounts of money, millions of dollars, and those dollars would be sheltered. I mean, those would be tax free. Those would be before tax dollars, and they would be sheltered from tax taxes, and maybe they'd earn, a 2% return and get their capital back in a couple of years. So my point being with this story is that there are sources of equity out there that are, maybe not driven as much by that 10% cash on cash return, that 16% IRR, that 2x equity multiple. They're more driven by preservation of capital, and they're more driven by, some people are very driven by the philanthropic aspect of what we're doing and our mission and what we're doing. Identifying those people, networking with those, getting in front of those people, and educating them on what we're doing and how we can add value to their situation is a lot of what we're doing to try and change what the cost of our equity looks like. There are fund managers on, the East and West coasts, and I'm sure everywhere in between, that will allocate a portion of their fund to boutique syndication operators, and perhaps the returns they're seeking are different than the returns we are typically seeking with our traditional investor. So long story short, finding new sources of equity with different needs and expectations as far as returns.
Yeah, it's great takeaway, man. And Brian, I mean, this sounds so familiar, right? We talk about identifying your investor avatar. And I think, if you're building your investing thesis or criteria on one particular asset type or strategy, and it yields that return expectation, well, if that doesn't meet the demands of your investor database, then you just got to go, like you said, you got to go find new capital, right? You got to go find the investors that align with who you guys are and what your thesis is. And so I know, Brian, we talk about that all the time, right? Is finding that ideal investor avatar.
Absolutely. Yeah. Knowing your investor avatar is super important. And it just goes to the reality too. I mean, I think what you guys are doing, and it's the same thing we're trying to do, is phenomenal. You have to sort of foreshadow, and do things not based on where you're at, but based on where you want to be, right? So if we all have intentions of, let's say, buying a $60 million deal one day, or a $50 million deal, whatever number you want to call, the chances of you raising all that money on 100K a pop private equity, very slim, right? It's possible, of course, and there are people that do it, but the reality is you're probably going to have a very large equity partner that sort of, you're of course probably going to have some LPs, some passive investors in private equity, but a large check might come from a family office. It might come from some sort of fund. So forming those relationships now, nurturing those relationships, going out to dinner, just hopping on calls, those types of things, you're laying that foundation for your potential future success. So I love that idea, and I know it's something that we're definitely preaching as well. Always be looking for capital. You can never stop raising equity and raising capital.
Yeah,
absolutely. Well, and to kind of tie it all in together, then, I would argue all of us are having the same challenge, right? Is adjusting the return expectations for, I think, the retail level investor, right? Getting them to understand where we're at in the market cycle and what we're seeing as far as those yields that on these particular strategies we're pursuing. For you guys on the acquisition side, are you seeing, or is that forcing you to be creative in how you're structuring your deals in your underwriting? More so maybe on the equity splits, more so on, are you looking at longer term holds? Like, give us a 30-second rundown on some different ways that you're being creative, not just finding value at the property level, but actually in your underwriting to maybe find an opportunity, that may not be so apparent.
I'll tell you a couple, like you said, real quick. Like you just mentioned, preferred, playing with the preferred return, investor split. I know for us, asset management fee, acquisition fee, potentially moving those, shifting those, working with a disposition fee rather than an acquisition fee, like all those kind of things that you're kind of working around. Then also kind of looking at refinances. We don't typically like to have that in, our underwriting right off the bat. Obviously, you'd like to just have, just the general debt, not have to worry about a refinance. But sometimes on certain deals, like you're saying, if you need to move the time horizon or something like that, it's actually warranted to, introduce a refi or something like that. Those are the types of things that I feel like I'm manipulating every day to try to see if we can get the green numbers on the spreadsheet, which is what we're really working for.
It's like putting together that like 1,000-piece puzzle, right? In the dark almost. You gotta move things around. And so, and that's the thing in today's time. I think those who are able to be creative, as I think we alluded this earlier, right, is being creative is going to lend you some opportunities that because it's not so fixed and straightforward anymore. You have to be dynamic and diverse in how you're approaching these opportunities and strategies. So, but Brian, man, this has been a fun conversation. Really, really love you guys, man. I love what you guys are doing over at Arrows. You guys are awesome. So anything else before for Loren and Frank before we close out the show here?
No, these guys have been a huge value add to our listeners. We definitely appreciate you coming on and sharing some operational insight. I think listeners always like to hear sort of, what's going on behind the curtain and what are the challenges you're facing. So we definitely appreciate your insights.
Oh, we really appreciate being here. I mean, you guys are tremendous. You've got a tremendous platform and you add a ton of value. So we're just very excited to hopefully be able to add some value to your listeners as well. Always happy to help out wherever we can.
Awesome.
Yeah, thanks a lot, guys. And no joke about getting on a deal together for sure. We like what you guys are doing, and we got a couple in the pipeline I had talked about that are down in your area. So if they make sense, we'll be in communication.
Hey, we definitely share the same sentiment, man. We are going to make that happen for sure, and then that'll be another podcast episode too. We'll have to pull that one back full circle. So, but well, cool guys. Well, as we wrap up, we got a few more questions for you, then we'll end the show with that. Okay, so so this would be both for you guys. But what do you guys like to do for your continued education to further your investing?
Oh man, listen to your podcast.
Perfect answer.
Perfect.
Yeah, no, I do a lot of listening to podcasts, reading books, a lot of, again, all the things we've already talked about, networking with other operators and sponsors. And I'm constantly, learning things through those conversations, going to those live meetups, continuing to learn through those live meetups, different masterminds, and again, a lot of networking goes on in all those places. So it's a win-win.
Yeah, I echo the same. I try to dedicate and block time specifically during the week for education and growth, because I feel like if you're not going that direction, you're going in the other direction. So there's some great books out there, in this space and for the many different aspects of multifamily specifically. But yeah, listening to podcasts like your guys' podcasts, I got a couple. The last two, I was on vacation. I didn't get to listen to them. So those are in the queue right now. So those will probably be the next things I'll be doing.
Don't worry. We'll make sure to send you guys the check in the mail for that plug. Okay. No. Well, guys, what have been like maybe one or two of the biggest lasting lessons you've learned along your journeys?
I can take this one first if you want to get a second to think, Loren, because it just popped into my head very easily. The team aspect that we've talked about before. I've worked on teams before, but it was always, you could do it on your own if you wanted to. I know in the trading industry, there's a lot of individual traders out there, and that's something that I aspire to be, for a long time myself. In terms of software development, it's very easy to be on your own as well. But the benefits from a team, and especially a team where you're aligned, with your longer term goals and that kind of stuff, has just it's opened my mind to, just the way that you can grow and the bigger things that you can get to when working with people as opposed to on your own.
For me, I certainly echo those sentiments, but I've found that, and this is in all aspects of life, but specifically here as well, business and real estate, multifamily specifically, incredible and significant things happen when you prioritize other people, adding value, helping other people, genuinely concerning yourself with their success. And, that has just been not by design, at least not intentionally in my mind, but that has been just hugely impactful on my life.
Yeah, that's huge. Good job, guys. Well, one piece of advice, the best piece of advice that you'd give to the listeners to help them grow their businesses.
I'll go first on this one. This is the advice that I got from a coach that I had early on, who's just been, he's tremendous. So I will happily share this. One, get really good at underwriting. Even if you're not an underwriter, you need to understand and be, have a foundational level of underwriting. And number two, I know we've talked about this too much, but never stop networking. Understand your value proposition to a team, refine, get better at that value proposition, communicate that, and do that in parallel with constantly networking, and you'll find yourself in some great opportunities.
I would definitely agree with those. I'm going to go a little different direction. I would say figure out your why. To me, this is an industry where a lot of people, I'm sure, get into it because they think, oh, it's going to be, easy, or I'm going to make all this money or whatever. And they, probably drop out relatively quickly afterwards. If you start with a strong why and you are committed to what you're going to do, learning all the stuff that Loren talked about and all the other aspects of this business and stuff is something that really most people can do. I mean, none of it is like rocket science or anything like that. But if you have a strong why and you connect with it every single day, I think if you just stick with it at that point, that would be the best advice I can give to anyone. And I know it's helped me tremendously.
Well, both of those points, guys, are phenomenal advice. I mean, huge nuggets there. So really appreciate you sharing that. Tell the audience how they can learn more about you guys and get connected with you.
You can find both of us at arrowscapitalgroup.com. I'm on Facebook, LinkedIn, Instagram, everywhere at Loren Jacobs. My Instagram handle is Loren Jacobs Invests. Feel free to reach out anytime. You can email me at loren@arrowscapitalgroup.com. Again, I am genuinely interested in helping others grow. So please feel free to reach out anytime.
Yeah, same here. Email, probably the easiest. It's frank@arrowscapitalgroup.com. Facebook, LinkedIn. If anyone wants to reach out, if anyone's interested in underwriting and stuff like that, or wants to kind of see some of the stuff that we talked about, like a preliminary analyzer or any of these systems that we're working on, I'd be more than happy to share them. So.
Awesome. Well, guys, I want to thank you so much for the great conversation, all the great nuggets that you share with the audience here. Listen, for anybody who's listening who hasn't connected with you guys before, make sure to check these guys out. They're the real deal, making things happen, and you won't regret it, I promise. So I want to thank you both for tuning in today.
Yes, thanks again.
Thank you, guys.
Thank you, guys. It's been a pleasure.
Excellent.